Imagine this for a second. You go to sleep rich, like really rich, and then you wake up the next morning and your bank account is just empty. It's been wiped clean. There was no war, no alien invasion, just poof, the numbers are gone. So how in the world does that happen? Let's get into it.
Okay, so picture this. This was America back in 1929. We're talking about the richest country on the planet, and it was in the middle of this huge nonstop party. The future? Oh, it looked incredibly bright. Money was everywhere, and people were sleeping easy, absolutely convinced that these good times, they were never, ever going to end.
$200 billion.
I mean, let that sink in. That's how much wealth in today's money just got erased. It literally vanished from the economy like someone just hit the delete key on the whole country's savings. So the big question is, how on earth does a country that successful just completely, totally faceplant?
All right, to really get how the crash happened, we gotta go back to the beginning of the party. So let's do that. Welcome to the Roaring 20s, a decade where pretty much everyone thought they were a financial genius. So, the Great War had just ended, right? And all these factories that had been building tanks and weapons, well, they needed something new to do. So they pivoted, and they started pumping out all this incredible, shiny new stuff. We're talking toasters, refrigerators, radios, things nobody really needed, but man, did everyone suddenly want them. And just like that, you have a massive economic boom on your hands. And a huge piece of this puzzle was Henry Ford's assembly line. I mean, what a game changer. All of a sudden, building a car went from taking half a day to just 90 minutes. Cars were rolling off the line like burgers at a drive-thru. And this created this perfect domino effect, right? More cars meant more jobs building them, which meant more steel was needed, more oil, more rubber, and more money in everybody's pockets. It really felt unstoppable. And people, they genuinely started saying things like this, like recessions, oh, that's old-fashioned, we solved those. There was this incredibly dangerous sense of invincibility, this belief that they had cracked the code, that they'd actually solved the economy, which, is exactly the kind of thing you say right before a total disaster. Okay, so now let's look at what was actually fueling this big party, because it wasn't just hard work. It was powered by two really dangerous ingredients: a massive ocean of debt and a stock market that had gone completely, utterly off the rails. So Americans figured out this powerful and super risky new superpower, buying stuff with money they didn't actually have. It was all about installment plans. Want a new car? No problem, pay later. That fancy new radio? Pay later. The banks were just handing out loans like it was Halloween candy, and buy now, worry about it later, well, that basically became the new national sport. And look, this wild gambling wasn't just for radios and cars. Oh no, it completely took over Wall Street. The game was called buying on margin, and it basically turned the stock market into this giant high-stakes casino. Here's how it worked. You could put down just $10, borrow the other $90 from the bank, and control $100 worth of stock. If that stock went up, you were a genius, a hero. But if it went down, well, you weren't just in trouble, you were completely wiped out. So guess what everyone did? Yep, they borrowed. A lot. And the result was just absurd. You can see it right here. The stock market quadrupled in just a few years. It was growing way, way faster than any actual real-world value could possibly justify. Why? Because it was almost entirely fueled by borrowed money. It was a giant financial Jenga tower, held together by nothing but pure, blind confidence. And don't think this was just some game for the rich folks. No way. Everyone was in on it. We're talking teachers, taxi drivers, barbers, you name it. There are these famous stories of shoeshine boys giving out hot stock tips while they worked. And, there's that old saying, when the shoeshine guy starts giving you financial advice, it's probably time to run. And then it happened. October 1929. Someone, somewhere, gently pulled one of those bottom blocks from the Jenga tower. There wasn't some big warning sign, no dramatic speech on the radio. It was just sudden. A quiet, spreading panic. Think about it like this. You're in a packed stadium that catches fire, but there's only one tiny little exit door. A few people start to run. That makes a few more people nervous. And then suddenly it's a full-on stampede, with everyone trying to cram through that one tiny door at the same time. That is exactly what happened on Wall Street. Everyone tried to sell at once. And here's the really crucial thing to get. Fortunes didn't just shrink a little bit. They completely disappeared. The money people thought they had, their life savings, their retirement funds, it didn't just get smaller, it evaporated. Poof. In a matter of hours, it was just gone, as if it had never even existed in the first place.
And this is the part of the story that so often gets overlooked. The stock market crash? That wasn't the end. That was just the beginning. It was the trigger for the real pain, the great national hangover that would last for an entire decade and change America forever.
So what happened next was this absolutely catastrophic chain reaction. Okay, follow me here. Step 1, the borrowers who'd gambled on the market can't repay their loans. Step 2, this means the banks who had loaned out all this money suddenly start running out of cash themselves. Step 3, people hear rumors that their bank might be in trouble, so they panic and rush to pull all their money out. This is a classic bank run. And step 4, that's the final blow. The banks collapse completely, and they take every single person's life savings down with them. So with the banks gone and businesses totally broke, the jobs just vanished. At its absolute worst, 1 out of every 4 Americans was unemployed, 25%. I mean, just stop and think about that for a second. Look down your own street and imagine that every 4th house has absolutely no income. None.
And the human suffering was just immense. And it kept getting worse. First, it was mass unemployment, starting in 1930. By 1931, you had breadlines stretching for entire blocks. A year later, in 32, families were selling their personal belongings, their heirlooms, just to buy soup. And then, as if things weren't possibly bad enough, nature itself seemed to turn against them. In 1933, the Dust Bowl began, turning huge parts of the American heartland into a desert. So by 1933, the country was just exhausted and angry. But then, a turning point. A new president, Franklin Roosevelt, stepped up. And instead of just telling people to be patient and wait it out, he basically said, all right, enough of this. Let's get to work and actually fix this. And this really shows the huge shift in thinking. The old way was the stock market casino. The new way, the New Deal, was all about public works projects. The government replaced the speculative gambling of the 20s with real, actual, tangible work. Instead of betting on abstract numbers on a screen, the country started building things you could actually see and touch: roads, bridges, massive dams. And it worked. Millions of people were hired, which gave them not just a paycheck, but a real sense of dignity again. And maybe even more important, crucial new rules were put in place to make sure this kind of disaster couldn't happen again. Banks were regulated, people's deposits were finally insured by the government, and Wall Street, well, let's just say it finally got some much-needed babysitters. In the end, the Great Depression taught America a really brutal but absolutely vital lesson, and it's this. An economy isn't just about numbers, it's about people. And when a system driven by pure greed turns into a casino, eventually, everyone is going to pay the price.
So the story of the Great Depression, it's not just history, it's a warning. It's a reminder that nothing is ever guaranteed, and that those financial Jenga towers, no matter how tall and impressive they seem, can always come crashing down. So the next time someone tells you, hey, stocks only go up, what are you going to remember?